All right, what's going on, everybody? What's up? Y'all having a good day? I mean, you know, any day's a good day, right? If you wake up. So, we've got a request to talk about indicator today. That won't take too long, but that's pretty much the only thing we got on the table. Kind of wanted to take a look around at some inflows and outflows, the markets, kind of like ETF, money flow, that sort of stuff. Kind of get an idea if they're signaling anything for next week's drama, right? Because next week, whew, that's where it all really starts to kick off. QRA Monday and Wednesday, FOMC Wednesday, and the tariff deadline on Friday. So that's a lot. So far, more of the drama seems to be with Japan and Europe than it does with anything happening in our own backyard. But you know how the markets are, they will focus on what's right under their nose today and not even think about what's going on tomorrow until it's too late. So we'll take a look around anyways. Maybe we'll find some shopping ideas, or some YOLOs or something. So the indicator request happens to do with the TTM squeeze. And the squeeze has been around for a long time, and it was mainly designed from a concept, a logic, right? So if you are familiar with this, then my apologies. We gotta go through it anyways. And if you're not, then pick up something new today. There is this idea about Bollinger Bands and Keltner channels. So I've got both of these. They are Thinkorswim's default indicators, no adjustments needed. And here is the TTM squeeze. All right. So back in the day, before they had such a thing called the TTM squeeze, um, people noticed that if you had the Bollinger Bands loaded with the Keltner channels and the Bollingers compressed enough to actually slip inside Keltners, that it would be this really great signal for a market compression. There's a lot to unpack there. We can see in the candles when we have a consolidated market, right? If you think about expansion versus contraction and a market that's in consolidation, we can see it in the candles. So when I first heard about this indicator, I thought, well, I don't need this loud, noisy trash all over my charts. I can see when price is tight in a range and it's consolidating, right? I mean, there's not much behind that. Why do I need the indicator if I can read price? And, I'm highlighting areas where we've got really clear market compression and we are consolidating. None of those are lining up with a TTM squeeze, by the way. So it's not just that a market is going sideways or that a market is compressed or consolidating. And there are candle patterns that can help you see that sort of stuff. Instead, we have to realize what the Bollinger Bands are or what they represent, and they represent volatility metrics. Anybody who doesn't trade options, when you start talking about volatility, their eyes just kind of roll up in the back of their head. They start drooling and tune you out. They don't want to hear it because they don't trade options and they don't care. So with Bollinger Bands, you don't hear the word volatility that much unless you actually go in and start studying them. And that makes people comfortable with them and they use them and they don't realize that they are using a volatility indicator. So when we see these bands go inside the Keltner channels, it's not just some indication that price is consolidating. Instead, it is that volatility is compressed. And the really neat thing about compression in the markets, if you think about like a coiled spring, is if you compress that spring to where it's really, really tight, it'll pop. Anybody who's ever, tore apart a gun and cleaned it, then you go to try to put it back together in that slide spring, you shoot that sucker across the room and then you can't find it, right? And you spend 4 hours trying to find the slide spring. That you have to be very careful when you're messing with springs, right? You compress them and then release them and they shoot all over the place. So, market compression with volatility is a good thing to spot. The problem is, if you don't have a volatility indicator on, you can't necessarily spot volatility with the naked eye. There's indications, bigger candles, bigger daily moves, that sort of thing. But then we don't have a level to gauge how big is that volatility, right? We don't have a number to put on it. That analogy always goes back to the idea that you can drive a car down the road and sure, you're going kind of fast or kind of slow, but unless you look at the speedometer, you don't exactly know how fast you're going and is it increasing or decreasing. So when it comes to using an indicator, having that number that something is increasing or it is decreasing or it is at a particular level gives us that assurance that we know exactly what level we're at. So as you can see on the screen, this is really noisy, right? Don't look at the bottom part because that's what they figured out as a solution. Look at the top part. It's wild, chaotic, it's noisy, it's all over the chart. It's just a big mess, makes it hard to read price. And along the way, somebody said, this sucks. Let's come up with something better because I don't want all of this trash on my chart all the time. We can see a squeeze right there where the Bollinger Bands actually went inside the Keltner channels. And since this is all just really noisy, let's clean it up a little bit. We don't need the mid for the Keltner because it's the mid of the Bollinger too. They're both using a 20 period simple moving average. So we'll turn that one off. For the upper band, we'll make it bright yellow and 3. Same thing with the bottom, bright yellow and 3. So now the Keltner is this bright yellow. That makes it a little easier to see. And then for these, we'll keep the midline, but it's a 20 period moving average, so we're going to make it green. We'll use a lighter green, I reckon. And then for the lower band, maybe something really different than yellow. So purple is good. And you know what? That 20 ain't helping us out at all right now. So let's just go ahead and turn the 20 off. That way we only have these 4. So now you can see squeezes better. It's when the purple lines go inside the yellow lines. That's a squeeze. And if you can stay in there for a little while, then you're squeezing for a longer period of time, right? And the longer you squeeze, it goes back to the old phrase, the wider the base, the higher in space. The longer you squeeze, the more energy you're building up so that when you do move, you're moving with a lot of energy behind it. So that's a squeeze signal in all of its glory. But as you can see, it's an absolute mess. You can turn these into clouds, and uh, over the years, I've built some really cool squeeze indicators that are reading this right here, because that's what all of those squeeze indicators are trying to read. Did the Bollingers go into the Keltners? How long did they stay there? And is price giving us any indication on which direction it may break out of when it leaves the squeeze? That's what the squeeze indicator is doing. So now let's turn that on. And we can see the red dots down here matches up with that squeeze, right? Where the purple went inside the yellow. and it lasted for more than one dot. We were in there for a little while. And we can see that the blue was decreasing and we were actually crossing down, implying that when price did come out of the squeeze, it was likely going to expand to the downside. So that's what we were getting from the indicator. If we wanted to make it more fancy, kind of soup it up a little bit, how could we do that? And the reason I'm bringing this up is John Carter from Simpler Trading, he has a Squeeze Pro indicator. And I have that indicator, by the way. I've got Column, Squeeze Pro, and all sorts of just fun stuff, but I can't give it to you because, well, I don't want sued. And I've heard these guys go after people who share their indicator. So I'm not going to do that. Right. Let me get signed in here. Now, thankfully, I didn't have to buy any of this. Know somebody who knows somebody got me access to it. And, it's kind of the perks of doing what I do. But I'm signed in now. And if I go to the indicators, we can see what his indicator is doing, the Squeeze Pro here. I don't think they tell us in this everything that it does, but I know what it does. So we're going to get there, right? So details on what their indicator is designed to do. I think they've got like a PDF that I could download and give to you. Um, they have some videos that they've made over the years on, their traders using the indicator, and it's a $700 tool. So when people ask me, "Hey, should I buy this? Is it a game changer?" You should not buy this. And I know that they're not going to be happy with me saying that, but no, you should not spend $700 on this indicator. A lot of these places, they don't make money from trading, right? They make money from you buying their stuff. That's how they make money. I've got an entire Discord full of indicators that I've coded. And the reason that I don't sell them to you is because I'm not interested in selling things, right? I'm a trader, not a salesman. I don't want to make money off of you. I want to make money off the market. Well, that's what these people are doing. They're trying to make money off of you, not off of the market. And if this indicator was game changing, revolutionary, that would, take your trading to the level that you're missing, they would make money with this and they wouldn't need your money. Right. So is it good? Sure. I mean, it's an indicator that gives you a better point of view than the default indicator. Is it going to, solve the problem of not knowing how to trade? No. You're still going to need to know how to trade. And even traders who've traded for years and are already consistently profitable traders come across this and they say, yeah, it's okay, but it didn't change anything in the grand scheme of things. So it's not worth $700. Maybe if they wanted $20, I'd say go ahead and buy it because whatever, it's 20 bucks. That's like breakfast at McDonald's nowadays. Spend 20 bucks. 700? No. So as it was saying right there on the screen, it highlights three different time frames, three different types of squeezes. So it's good for swing traders more than day traders. I'm sure they have videos somewhere of day traders using it, but it's more of a multi time frame indicator than anything else. And I want to kind of discuss some of the settings that they changed. I can't tell you exactly what they did, right? Because then it'd be like giving you the indicator. But there's only so many things that you can change. So let's get this noisy stuff off of here. Well, you know what? We're going to leave them on here. I'm just going to shade them out because think about what you can adjust with a Bollinger. You've got your bands on the Bollinger that are set at a 2 by default. You could shorten those up to a 1, 1 1/4, 1 1/2, right? 1 3/4, 2 1/2. So you could play around with those. And then you've got your midline look back length. They've got it at a 20. You could kick that down to like a 10 or, you know, bump it up to a 25. And you could flip this over to an exponential or like a Wilders. So those are pretty much the only settings you can change on that one. And then the same thing with the Keltner. It has a band on it or a factor that calculates the band and then the length and then the average type. So you don't have, a lot of wild settings to begin with. When we get into the TTM squeeze, it's going to be focusing on those same dynamics. What's the look back? That's the 20 in both of those. Make it higher or lower. Shorter time frame uses less candles. Higher look back uses more candles. Right now, there's a trade-off with both of those. The shorter the candle length, the more jagged and lefts and rights it's going to take, right? It's not going to be very smooth. It'll be very jagged, but it'll be more responsive to the immediate price action that you're dealing with. So it'll capture big moves and that sort of stuff. The bigger the number here, the smoother the entire indicator is going to look, but it's calculating farther back. 20 on a daily, that's 1 month, right? There's 20 market days in a month. So if you set this on a 20 and you go to a daily chart, you're looking at last June from the 23rd to July on the 23rd. You may not care to look at June's price action, trying to figure out if today we're beginning to slip into a squeeze, right? And then there's the length of the bands. The bands come into play when you're looking at the squeeze because of the slope of these areas here. Even the shape of this slope was the Bollinger Band on the upper side of the Keltner. And then this was the slope of the Bollinger Band as it came out of the Keltner, right? To the downside. So I don't have to turn those indicators back on to know what the slope of the Bollinger Band looked like. I can see it in these Schwab bars or histogram bars. And obviously, if you change the width of the bands, these are going to get longer and taller, like way up here, and or much shorter, like these here. It's not a game changer, right? It's certainly not $700 worth of game changer. But I've had new traders say, "Hey, the videos were cool. I watched them. I learned something new about trading that I didn't know before." Um, and they liked having this thing that they bought that they felt they had to use because they spent $700 on it and they stayed dedicated to it. So, if you're having problems bouncing around from indicator to indicator and strategy to another strategy and you just can't nail down a system and you spend $700 and it makes you sit put and actually put some effort into studying things for 2 months, if that's the cost of getting your attention, maybe buy the indicator, right? But really, the moral of the story is if you just sit tight on one thing and, put some elbow grease in it, you'll get to that level anyway. So their indicator is going to adjust the bands and then price will break those bands sooner. And narrower bands mean that the Bollinger will go into them sooner and stay in there longer. So these dots will appear a little quicker and they will last a little longer. And the histogram bars will break out sooner. That's what you'll get out of using the quote pro version versus the regular version. I can't tell you exactly what the settings are because that would be like giving you the indicator, right? But I can tell you if you shorten the bands and you shorten the look back, you're going to get a lot closer to their version than the original version. And you'll be able to see for yourself that it's not really that much of a game changer. A lot of people that I know don't look at the histogram bars at all, right? So along the way, we started to use this a lot more, and we were getting to the point where we were not using these histogram bars. And so ours was looking, I turned off the wrong one. Ours was looking a lot like this here. That is what we were using for squeeze. And if you think about it, we don't need all the other stuff, right? And if this is all we need for a squeeze, then there's another indicator that we can use called price line. And all it does is it goes where price is. I'm going to put my mouse right there. And you can see the line that goes to the left and to the right. That's a price line. So that when price moves up or price moves down on any time frame that you're on, that line will be there and you can see it moving up and down with price. It's a very old school indicator, very basic, called price line. If you take that price line and you start adding dots to it, you would be able to put a signal on that price line for a squeeze. So I have one of those built in the Thinkorswim Discord you can grab. And then you can, get rid of that indicator off the bottom. I don't think I have it installed. Yeah, maybe I here's what a dynamic price line looks like. It's just to the right, but I think I can turn it on for the other direction. That's a dynamic price line. We want the one that's headed to the right because we want to see where previous squeezes were at, right? So we'll try the other one here. And like I said, I probably don't have it. Yeah, no, that's definitely a don't not what we want there. Price as a line. It's exactly what it says. So we'll just jump over to the Thinkorswim workbook and grab it. What's nice about the squeeze, whether it's the pro version or any of the others, is that you can put those in watch lists too. And then you can scan for things that are squeezing or that just came out of a squeeze, which is really nice. So that's the Bollinger Band squeeze scanner. On and on and on. Yada yada. It's this one. TTM regular. That's one of my modified ones. We're looking for something specific. All right, so I mentioned how the Bollinger Bands are going inside the Keltner channels. I made an indicator that turned the Bollinger Bands invisible unless or until price broke through them. Then they would become visible, right? Like, and you can make them clouds or whatever, right? So in this one, the Keltner is solid. The clouds are Bollingers of different size. And so you can see inside the band with a one standard deviation, inside the band with a two standard deviation. So there's all kinds of ways that you can mod this. And this is a really close concept for their indicator, right? That one that I can't tell you the settings on. But this is a visual of if you did change the bands to different sizes, what would it look like? And you can see how quickly it goes into the bands and how long it stays in there compared to another version or a different version. That has me intrigued. I can't remember what. I think this is like some crazy squeeze version that I'd never come across. And so I think it's like really loud, really crazy. And I thought, we'll have to circle back with it. And I guess I never did. So we're going to load this one, but I don't remember what it does. So we'll come back to it. There we are. Price line squeeze indicator. All three of these. And then this by Mobius, since you have those dots, right? Mobius, which is a really awesome coder out there, he was looking at those dots and he thought, why only signal a TTM squeeze? If we can put dots on that can mean anything we want the dots to mean, then we could do moving average crossovers without having moving averages. We could put VWAP crossovers without having the VWAP. Pretty much anything you want, right? RSI, MACD, stochastics, anything you want those dots to represent. And it doesn't have to just be a dot. It can be a square, right? An arrow, a cross, whatever Thinkorswim will let you code. So he built it with RSI divergence, overbought and oversold, plus the squeeze, and that's his indicator. I'm not sure why he called it foo, but whatever. So that's his. And then there's these price line ones. Now I've got three here. I'm pretty sure they're going to be similar, but you know, whatever, right? All of these are free. Doesn't cost you anything. Kick the tires. I'm curious about this one just because these words tell me it must have been something really wild that I didn't even mess with it at the time. It's just probably something really loud, crazy, all over the chart, and made me think, what the heck? And just walked away from it completely without even messing with it. So let's see. Yeah. Yeah. Okay. Load a bunch of things into an indicator that shows you dots, squares, and triangles, and that's what you get, right? To even use this thing, you'd have to get the key card. So that would be opening up the scroll here, getting all the notes out of it. Hopefully, they put notes in here. They didn't. So you got your Bollinger upper using the regular dots, and then you've got the squares for histograms. This is just nuts, right? It's a lot. If the corresponding wave is going down for short trades, you got these. That's the Keltner bands. You just have to like the easiest way to do this, I would say, give it to AI, let it read this code and tell you how to read this mess. But why? Right? Like I don't even want to mess with it. Nothing in there for me. So we'll move on to one of these others. I'm not interested in doing that one. So now we'll look at the one that has the RSI built into it. All right, so they're using a price line, and some of these dots are going to be because of a squeeze, and some are going to be because of an RSI being overbought, oversold, or divergent. But you'd have to read the code to figure out one or the other. He usually is really good about putting in a hint. So there we go. Plots of squeeze, RSI, overbought, oversold, and divergence. Dynamically moves with price. Squeeze is yellow. RSI overbought is squares that are red. And RSI oversold are squares that are cyan. So there you go, right? Oh, there's divergence too, right? Triangles are divergent and they are purple and blue. No, let's see what blue is. Blue is nothing, which, over the years, I've gotten to the point where if there's nothing, turn it off to where, if there's nothing, then instead of blue, make it transparent. So you just don't see a dot. That way you don't even have a color that you need to try to interpret. You just don't have anything plotting at all at that point, and your mind doesn't have to try to run like, what is the dot? No, there is no dot. You don't have to worry about it. So there you go. That's a squeeze with RSI built into it. And you could turn a line on in there, right? So that you'd at least have a line, just no dot. This is the one that I coded. I'm pretty sure. I'll check the notes, but it goes on both sides of price. It looks back with no stopping limit, and it shows you where there were squeezes. And to me, this one's not that bad, right? Like when we think of chart space and being subtle and not distracting you from what's going on, I like this one. Well, that was the wrong button. That whiteout mode. I like that. Um, it's simple, it's sweet, and it's just not too distracting. The line changes color, so I was looking to see if there was a particular reason that I wrote in here for why the line started to change color. All right, the squeeze color. I got bullish, bearish, and non, and then squeeze. So whatever squeeze happens to show on the label, that'll be what we get. Squeeze up here. Let's change it to something. We'll leave it alone. Leave it alone. Doesn't matter. So that's the squeeze. And you can load this multiple times so that you can change the dynamics of it if you want. I left the look back options for you to be able to change the code without having to go in here. But here's your standard deviations for the upper and the lower bar, those would be the numbers that you would want to change. We wouldn't really put in two different ones, right? The bands are almost always the same, so let's just use band instead of upper band, lower band. We'll just use band. Unless they're using a negative, and they're not, since they use the positive and the negative here, doesn't matter. So now, if you use this one, you can just open up here and change the code. And that way you can load multiple versions of the same indicator, change your colors down here. Now, some recommendations on some tweaks that you can do to this: add more than one set of bands. That way you don't have to load more than one set of indicators. If you put multiple bands in here, you could have bands that are set at half, and then one, one and a half, two, two and a half. And then the other thing would be the color of this line as it goes across the screen. Pick a moving average that you really like, or VWAP if you want to use that. And if it's above that moving average, make it one color. If it's below that moving average, make it another color, right? Like if we're above the 200, it would be green. And if we're below, it'd be red, something like that. That way, the color of the line itself gives you an idea of where that moving average is, so that it's one more indicator you can turn off and not have to have on your screen. And of course, you could do that with anything, RSI, stochastics, whatever. I was just thinking about moving averages because they would be something that you could reduce, right? Remove another indicator off the screen. AI should be able to help with that, but if not, when we can go through it, I don't care. I like messing around with this stuff. So if you add bands, you would just put a number behind it, right? Upper one, upper two, upper three, upper four, and then you just put a direct number in it. Don't use the input stuff. Then you would just be looking for a squeeze, so that if it's above or below whatever. See how we got W and B, upper minus lower and mean, and then the other way around. Instead of it being upper and lower, you would just run that again, only it'd be upper one, upper two, lower two, right? So their indicator is just giving you those multiple band levels and a different look back period. But I can't tell you, right, what their exact is. I've never seen much value of a squeeze indicator on intraday timeframes, but I don't trade with indicators. So, you know, kind of take that as you will. What I do use a squeeze for is when I'm looking at a higher time frame and I'm doing analysis on something like a daily, weekly, monthly. If I have a suspicion that we're in some sort of a squeeze, I'll turn it on to take a look and see if we are in some sort of a squeeze. And generally it's because, as you can see here, maybe I don't know how good these clouds show up in live streams, but I have a Bollinger Cloud on. It's turned on really light, but it is there, especially if I put my mouse on it, you can see it better. And if the Bollingers are squeezed in, if they're pinched like they are right here, That to me oftentimes signals a squeeze. So we were very likely in a squeeze right there, and then we expanded out of that squeeze to the downside. And if I'm getting ready to put on a trade, I want to know, you know, are we in a squeeze or not? So generally the Bollingers will give me a heads up, but I won't make my decision based on it. Where Bollingers become kind of cool, or at least the squeeze, is when it comes to search features. Generally speaking, when we do get into a squeeze, um, those are opportunities to begin keeping that stock on a watch list, looking for the expansion out of the squeeze. In this example, here's the squeeze, and there was the expansion out of it. And sure, I mean, we pulled back and then we expanded even more, but the initial run right there, that's a heck of a move, you know. You're not always going to get that, but your chances of getting that sort of a move increase a lot more if we're coming out of a squeeze rather than when we find price action sideways and we're like, oh, hey, look, we're consolidating in this tight range here. Yeah, but just because we're in a tight range doesn't mean we're in a squeeze. You know, we got to have the volatility side of that component. Otherwise, it's just price in a range, right? So you can hunt for stocks that are squeezing, preferably something that has been in a squeeze for more than 1 day. And the longer it's been squeezing, the better. And then you just put that on your list for a breakout trade, and or you start playing some sort of collar or strangle or straddle, right? If you put on an options trade that says, I bet we go up or I bet we go down, but I bet we don't stay here, that would be the best trade to play on something for a daily or a weekly that's in a squeeze, right? Because the idea that it's been in a squeeze for days and that it's going to stay in a squeeze for weeks more is unrealistic. It's very likely going to come out of that squeeze, especially if it's a stock and it has earnings or dividend or news, investor day conference, something. It's very likely going to come out of that squeeze with a big move to it. And if you have a directional component, then you don't need the either or, right? You can just put the downside trade on or the upside trade on and call it quits. So that's the squeeze. And I don't know, I'm sure as a company, they would probably hate me saying don't buy their $700 indicator, but I don't know. I don't like those places that gouge people. And sure, they're giving you an indicator that you don't have, but if they took 10 minutes to explain what their indicator is doing, rather than gouging you $700 for it, you'd be a better trader and you wouldn't be out of pocket $700. Me, I'd rather know how the indicator works so that I can grow as a trader rather than just buying something that says, well, when it turns yellow, trade it. Ah, I don't like that. We might as well look at what the other ones do, right? It's been so long since I've coded indicators that I don't remember what half of these do. Have to rely on the description that I shared when I posted them. And if there's no description, then it just leaves us having to load things. All right, so this has got multiple colors. and the line changes color. It's another Mobius version. I didn't code this one. Yeah, green or red based on the breakout, on which direction it's supposed to go and which way the squeeze is indicating. There's a label too. We're not in a squeeze, so we don't see the label, but there is a label too, so that if we do begin to squeeze, the label will tell you what the dots are doing, which is nice. And then finally, the last one. Yeah, this this price line was a game changer when I was coding because it really opens up all kinds of ideas on what you could put on the line instead of, just a squeeze or add it to the squeeze. Looks to be a lot like the other one. And that happened too. Yeah, version 1.2 written in 2021. I'll bet it's just the same one. 1.2 and 2021. Yeah, they're exactly the same. You don't need to load the third one. It's the same as the second one. So that's the squeeze indicator. There's a book I read a long time ago. I would give attribution if I remember who wrote it, but they were talking about how when you open up your broker, especially if you're a new trader, and you see all these indicators, right? There's 600, 800 indicators on here. It's a lot. And it feels overwhelming and it makes you think, oh, I got to learn all these different indicators and I'm not going to be a good trader if I can't use them. And that's not true at all. The book went on to argue that you could just like flip this thing in a wild scroll, stop it anywhere, and whatever you stopped it on, if that's the indicator that you spent the next year of your life studying and analyzing and researching, that you would become a really good trader, or at least, be way better than you were. Not because that indicator got you there, but because of the work you put in to learn that indicator, usually means that you had to attach something to it, right? How price was moving with the indicator. So you ended up studying price more or some other component, right? That you just basically learned how to learn more about trading because that indicator, while you were learning it and researching it, forced you to also research price and market behavior and whatever. And it was a really good book because it did break down the meat of the matter, which is most of the time, the only thing that really works is better understanding why price is moving. And it won't matter what indicator you pick. As you study how to use that indicator, you're really just studying why markets move. Undersampled double moving average with a sampling length of weeks. So it has a weekly time frame and a daily time frame. That's something kind of rare on Thinkorswim. This is using three time frames. The one that I'm on, which is a 5 minute, a daily, and a weekly built into it, which is kind of unique because for the longest time you couldn't do two, let alone three. You could have a 5 minute and look at a daily. That's where our TrendSpider style indicators come from. But I couldn't have a weekly, daily, and an intraday. And it adjusts for gaps. That's a very smart indicator. When it comes to these dots, you can add those dots to anything, which means if you do like having something like a Keltner channel on there, you can put the squeeze dots on the 20 period moving average that's inside your Keltner channel, and that way you can see the squeeze. You can put them on the moving average that you like, right? You can put them on VWAP if you want. And that way your intraday VWAP, if there happens to also be a squeeze going on, the dot will show up on your VWAP line. You know what I mean? Because a lot of us use VWAP whether or not we have anything else going on. So that kind of makes sense. It's a good little idea, by the way. I'm gonna go ahead and add that to my price line. Actually, I don't even need it in there. I need it in VWAP. If you guys don't have a Discord like this, one of these Thinkorswim style, and if you're using TradingView, then make a Discord for TradingView. But if you don't have an indicator Discord, really consider making one. Over the years, you're gonna come across all sorts of stuff, right? And you want a central location, especially for something like Thinkorswim. I have broke my Thinkorswim, and I had to get the Thinkorswim developers to wipe my account from the inside because I couldn't even load the account to get it wiped personally. So they had to reset every single setting back to its factory state. And I lost everything, every chart setup, every indicator, everything that I'd ever done, I lost it on Thinkorswim. So you kind of want to know that you've got a backup somewhere. It's a odd indicator. I don't know what I want to do with it yet, but I want to look at their code more later on. Later. So you really can just pick anything in here, and start to study it. You'll be better off for it afterwards. Well, when it comes to the advancing minus the declining issues in the broader market, we're still in a buy situation, right? It's a forced grind or a market melt up, whichever one of those you want to choose to label it. We're not stopping, right? It's still going. 63.92 market high today. Imagine that. I mean, we overshot it, but still. Yeah, we can get into that. Turn this stuff off. So here's a basic everyday run of the mill volume profile. And as soon as you load it, it wants to go to the right side and it wants to look all the way back to here, right? And that's not really helpful. Sometimes we want to just have what do we got today? And there's a couple ways we can do that. One, I can just make today's chart the only day that is showing. And now this volume profile is looking at only today. But I kind of want to know what the hell happened yesterday, right? At least give me my high and low of yesterday. And if I load that, I no longer have today's, right? But that's one cheat sheet way of getting it done really fast. Just make it today's only, and then you're good. But if you load multiple days like, a normal person, now that isn't any good. So just double click on it. It'll open up. We can find it. There it is. And it's asking time per profile. We don't want the entire chart because the chart's 5 days. So we want to set it for 1 day. And then it's going to ask, since we are using days, how many days do you actually want? Just one, today. But if we wanted today's and yesterday's, right, then we could do 2 days. But we don't. We just want 1 day. So here it's asking, do you want it where it is right now on expansion, or do you want it actually on price? I'm going to tell it to put on price for a moment because we're going to circle back to that multiplier. So now we have it on price. If we didn't want this, we could have just left it where it was and it would have stayed on the right side. And now we've got it overlapping and we've got every individual day. Now, unfortunately, we don't have a lot of play room here, but if you wanted it to start at 9:30 only, you're basically going to have to go in and just turn off the extended hours, which sucks, but that's how you can force it to do the intraday only. If you go to like TradingView or something, they've got the one that, will do session only and it'll start. And I think I've got some modified ones in the workbook that'll start right at 9:30. Um, but that's the only way that I know to kind of get a cheat sheet is just turn off the overnight and then forces it to start at 9:30 so that you have the intraday, right? Only the intraday, no Globex. I kind of like having it, you know. Oh, sure, sure. So what I do on my morning briefing is I show you guys a chart that has two profiles on it. This one here. We have this profile, which is volume, and then we have this profile, which is TPO. TPO is time, price, opportunity. You can think of the difference between these two as volume by time and volume by price. And when I've said that to people, they're like, that's still confusing. I don't know what the hell. So you can think of it another way if you want. The the volume profile is actually recording volume and the TPO is recording trades. You can have one trade but 500 contracts in that one trade. So there'd be a lot of volume, but there would only be one trade. So you can think of it that way. And technically, that's not what it is. But if I tell it to you that way, it's the easiest way for you to differentiate in your mind the difference of what these two do. So just think of them that way. And that's why I have both. Sometimes there's a discrepancy between the two of them, and I like to know that there's something a little off, but it's more about where are we at versus where do I think we're going next, which is why you guys almost never see me post pictures of these in the intraday because it's not going to help me figure out where we're going next. It just really helps me understand how we got to where we are and if there is anything to be mindful of, right? Like if we had seen this really large level of volume when we were still down here, meaning like in the pre-market, if we had run up there and left that volume and then we were down here and then we ran back up, I would have been really interested to know that that was there. But we put that in after we got there this afternoon, so it wasn't there beforehand. It wasn't helpful. It didn't give us anything. And if we sold off and then we try to run back up, even without turning this on, I would have already known that we had a lot of work in up there. But until we turned this on, I would not have known that it was a lot of big trades. It wasn't like a lot of little ones, which would have made this stick out really big. It was just a lot of big trades in there, which is why we got a lot of volume, but not as many trades in there. Oh, and if yours looks fat and gangly like this with these big, thick bars, open it back up and price per row height mode. I watched a number of videos when I was first messing with volume profiles, and I think every video said, don't mess with this. Idiots. Why would they tell you not to mess with it? Right? Like it just defeats the purpose of, hey, I want to know how this indicator works. Oh, well, set it here and set it here and don't mess with that. Yeah, thanks. That ain't helpful. Right? We're trading on the ES. It has a tick size. We can use the tick size. And now it's asking, what row height would you want? Try zero point 0.5, see what you get. And we're going to zoom in here until we start to see some numbers so that we can see where's that volume at. Back here. Hey, too far. There should be some numbers right there. And we can see where those numbers are landing. 63, 57, and 75 ticks, or 3 ticks, right? Then 63, 58, 63, 58, and 1 tick, 2 tick, 3 tick. So what did I just do? I forced it to give us another line on every single new tick of price in the ES. And that's why it has a much cleaner, nicer shape than the other one, right? If you don't want it to be that granular, then you can force it to a 1. Remember, I used 0.5. set it to 1.0, now it'll just do 1 point instead of one tick. And again, that's probably going to be more granular than what you got when you just ran it by default. So now if we zoom in and we look at where those numbers are, it should be every tick, but it's not actually, is it? It's like off by one tick. Should be every point, but it's off by one tick. Still, it's close to 1 point. It thickened the line just a little bit. So don't be afraid to mess with it. That's one thing that in the video really, I seen 4 videos, and I think every one of them said just don't mess with it. Why would you not mess with it? The worst that's going to happen is that you have to unload the indicator and then load it back again. It'll show up as a default, right? You can't break it. Fiddle with it, press the buttons, and if it's not what you want, then take it off and put it back on, and it's set to default, and you get to try again. Now, if you do have it set like I have it set right now, and it's showing you previous days, and you don't want to do a lot of days because of maybe memory resources or whatever on your computer, you can set how many days it goes back under profiles. Today is Wednesday. Maybe I only want profiles for this week. It'll help me more easily see Monday, Tuesday, and Wednesday. I don't have to count. So there's this week's trading, and it's not wasting resources back there if I don't want it to. Right. Cool, cool. Can also lighten the load a little bit. Remember, Thinkorswim has transparency in it. I know it's not as easy to find as TradingView, but if you go into the More button and then go to HSL or RGB, either one of those, actually HSV and HSL, either one of those has the transparency window. So you can set that pretty high, right? Like we'll use 75 and dull this thing down a little bit so that it's not so bright. Didn't seem to help all that much. I should have went maybe to 85 or 90. But you can dull it down so that it's not so in your face. I do that with moving averages and lines and circles and boxes. That way when I use my drawing tools, they're not so loud and it helps. I'm telling you, I don't like the stuff that's really loud on my screen. It's just bright colors and it obscures price and I don't like it. So especially when you do a lot of drawings like I do, I tone that stuff down. Yeah, and I've got saved styles, so that I can go to like a lighter background. And even this isn't white, but it's bright. Yeah, even this it's not even white, but man, it's bright. And I needed it today, and I went here and I was like, oh gosh. But I needed it because I was messing with my cog lines and they were using this really light gray and I couldn't see them on my regular chart. So like, where the heck are my cog lines? So I went over to that for a moment. I ended up finally just changing the color of my cog lines, but they blended in so well I couldn't even see them. I'm like that's too light. These are just perfect. They're not too heavy, not too dark. That's custom colors right there. And I added whole numbers or quarters. I added quarters to those. That's why there's two different colors. 75, 50, 25 round number, and then the cog lines. Oh, absolutely. Guys, indicators, as much as people think that I'm anti-indicator, I really ain't. If you have indicator issues or questions, bring them at me because we'll figure it out together, right? I don't know by any means, guys. I don't know it all, but I know where to look. And so I'll very likely find the answer if there is an answer to be found. So I don't mind. And plus, if I don't know, then I get to learn something too. And I always like learning something new. I need to modify my cog line indicator to turn off the lines if we get too far away so that it's not wasting think or swim resources on it. It does, doesn't it? It's not as bad as those voodoo lines. That doesn't look that bad if you go to Apple. Did you guys catch that Microsoft short? It's a lot. Yeah, it's a lot. The all of those places, they have a good resource. You just got to go crawling through it, and takes time. With Microsoft, I posted this yesterday in the trade channel for a short. Um, the credit spread that I posted hasn't made very much money, but if you took it with just straight puts, you're better off, right? I didn't want to do the puts because they're pricey. We used August 15 expiration, and we had um, 530, 540, I believe, is what I shared. I don't know. I built it for two people. I took one, but I can't remember which one I shared. So let me go look. Oh, yeah. Let the screen just go black there. Okay, it's back. It's back. Yeah. Yeah, it was 230, 240. The reason I had two is because there's what I call um, my style and then, the internet YouTube guru style. We were closer to 230 yesterday. And so it kind of fit my needs a little better. But some people like to go really far away. And I picked the levels based on one, how much open interest I found. And if you look at excuse me, not two, if you look at 530 and 540, you had a pretty high open interest yesterday, which of course it's higher today because there was more trading. So that's what I was focused on: 20, 30, 40, and 50. The gurus on the internet will say, "Oh, go as far away as you can," and then just bank on the idea that you're so far away it won't hit you. I say, screw that. It's a bad idea. I don't like it. I'd rather get closer to price. So doing something like a 520, 530 is much more to my style, and or a 530, 540, which would be, either doing like half of that one or half of that one, right? Kind of splitting the difference between the two. So it's kind of middle of the road. And that's the one I ended up sharing. But I don't like those really far out of the money ones. I didn't buy any of Simpler Trading's stuff. I have access to it because I have access to their website. Um, it was a gift. So, you know, um, there's things in here that I can't get a hold of. I don't think I can go into their trade rooms. I've never tried, but I don't think I can. And it's possible that I can't go into the coursework maybe. Again, I'm just not sure, but I can go into the indicators and I can pretty much just grab any of these that I want. And they do have a lot of videos, right? Like that's for sure. They have a lot of videos. But so does the Bullish Bears. They're just not all on the website, right? Like we have a ton of indicators or a ton of videos on our YouTube. $3,000. What the heck is $3,000? They are really nice people. I was working with them last year into this year. Um, but they wanted what I couldn't give because I already have commitments with other places like Spot Gamma. So we ended up parting ways. But we didn't part ways because I didn't like their product or because they weren't willing to compromise. I just I'm already tied up, right? So I couldn't. Um, when it comes to these guys, they do have things that Spot Gamma doesn't. Like a lot of their CTA stuff, I really like their CTA stuff. I really like it. But it was that one niche thing, like, hey, can I just have your CTA charts every day? You know, and when I told them I was sharing their levels right here in the chat, I was like, "Oh yeah, I take your levels and share them in the chat every day." They're like, "Well, you're not supposed to do that. It's part of the agreement that we had that you don't share our levels." I'm like, "How am I supposed to promote you if I'm not sharing your levels to show people how good your levels are?" And like they said, share them after the fact. Like I can't spend all day rewinding. into yesterday to talk about how good it was. You know what I mean? I just it's a dedication of time that I didn't have. So, like I said, we just ended up parting ways. They are a really great company. They're really nice people. They have an active Twitter. So if you guys follow them on Twitter, you'll get free handouts. They'll post like their gold CTA charts or their NASDAQ CTA charts, which is really cool. I always look for them on Twitter if they're talking about anything. But mostly I'm looking for those CTA charts that they post. Their Discord is nice. They have some dedicated traders that sit in there and post trades, and it's not my style of some of the stuff that they do, but I mean, at least they have knowledgeable traders that are getting it done, right? And that can answer questions, and you know, they're like us. They have traders that are trading it, and then they have traders that are or trying to be traders that are asking questions and learning. Oh, nice. That is cool. Glad to know you have access to them too. So, I did have access for a while, and I liked some of their default tools that they have, but there was just too much of a conflict between what I had going on with other places. It looks like they've updated their website some too. Yeah. My biggest my biggest trigger with them is this piece right here, these gamma levels on futures. When I was there, they did not have futures data. And they'd say, "Well, you can, get the levels and then use it on like use SPX, SPY, and then like transpose that and use it for futures." I'm like, "No, no, 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 dude. That you either give, yeah." When I was there, they didn't actually have futures data. And it was a sticking point that they would have language like this where it specifically says market maker on futures options. And then I would go into their data and they'd say, "Well, we don't actually have futures data." So you don't actually have futures options. No, but, and then they'd string along a bunch of sentences that I don't care to hear, right? That's what they had when I was there last. And I hit them on it as a sticking point over and over. Don't tell me that you have futures trading options data when you don't have any futures options data. Period. End of story. You either have it or you don't have it. There's no gray area there. And that was the final straw with me. And they would say, "Well, you can take our SPX indicator and lay it over the top of ES." Yes, I can. And it's awesome and thank you. It's great. Thanks for, thanks. But it is not futures options data. The end. And so that was a sticking point with me is that they kept saying, "Well, we have futures data." And then you'd go in and look and, well, we don't actually have futures data, but you can lay our tool on futures and it works. Okay, I'm not going to argue that it don't work, but quit telling me you have futures data when you don't have futures data. You know what I mean? I run indicators, I build code, I trade, I know what I'm doing, and I want the code to do what they said it's going to do. They have a they have a put wall screener that I really like and I used to share in the chat every morning. Stocks that are near their put wall or have broken it, stocks that are near their call wall or have broken it. And I really liked that scan. It was very simple and it was based on yesterday's data. It was just an awesome little scan that you could run in the morning to see what is on or near a call or put wall. And I loved that. And then those CTA charts, and I really loved those right here, the CTA models. Those are fantastic. That's is great. But their expected move, this guy, he's a really nice guy, but they act like their expected move calculation is the best in the market. Nothing else comes close. Whatever. I spent 2 years studying expected move and the different ways that you can model it, calculate it, define it, extrapolate it, populate it, use it. Theirs is okay. It's on par with what everybody else uses. They didn't get left behind, but they didn't revolutionize expected move into some, whole new level that nobody else has ever come across. And 9 times out of 10, their expected move was within the range of what I had for my own expected move. And I told him more than once when he's like, "What'd you think of that expected move today?" It did what I expected it to do. That matched my levels. It's not Jesus walking on water. You know what I mean? Like, it's just an expected move. He did not like that. Not even a little bit. So it's a really good point. When it comes to, and I mentioned this in the morning briefings a lot more now because I found that it helps along the way. Price, I just put a Linreg line on here. If we're moving down, price is going to cycle around that Linreg line. And if we're moving up, price is going to cycle around that Linreg line. The cycle wave will be dependent on the time frame of the chart. And you can just look back at what the wave has been doing, which is why a lot of people will draw a trend line overhead or a trend line underneath, right? And then you'll be looking for one of those TRB breakovers or something like that. How far the swing is what it's all about. Now I'm on a intraday chart, 15 minutes, and we're talking about a daily expected move. So if you default back to a daily chart, the wave that we're looking at will correspond to that price action. So, if you trade the same thing every day, like the ES, the NASDAQ, the QQQ, SPY, you've got a pretty good idea of what your average daily move is. There's your ADR, right? So there's how much are we expected to move today? And then there's what have we moved on average over the last month, for an example. So if we've been moving 1% every day on average for the last month, and today's expected move is half of a percent, then that tells us something really relevant. Or if we've been moving 1% and today's expected move is 1.5, or maybe even 2%, it tells us something because now we have context. What is today's number? And what have we been doing on average? So we got something to compare it against. Then why do we have that expectation? Why is it supposed to be a big move today or a small move today? And then that helps us feed into, are we actually going to get it or not? Because sometimes the markets will get scared over something and they'll price in a big expected move, and then that something doesn't happen and we don't go anywhere. If you've already got a pretty good idea that the something ain't going to happen and you got a high expected move, then you can play that, right? You can play iron condors and credit spreads and just you're basically going contrarian of the big move. But you get all kinds of context with it. And there's a lot of ways to define all of this, but the most common one is a really generic cone. So you get that probability of expiration cone. This is using a 100-day look back with a 68% one standard deviation cone. And there's your bubble, right? And if you wanted to add a time frame to that, since I'm using a generic indicator like a cone, it's going to use a generic time frame. And this one uses Friday expirations. So now we have those red lines and they correspond to these price actions. So we can see Microsoft could go up to 552 or down to 454 by September's expiration, right? I got a date and a time and a price that I got levels for. But that's not a daily move, right? That's more of a generic swing move, an expected move, but it's still an expected move. Once we have that model, we can extrapolate down to a 1 minute expected move if we wanted to. But we've got an expected move for the day, the week, the month, and this one is based on what has price action done. But I can come in here and get you an options based expected move right there. And this one is based on what is the market pricing in for an expected move. Well, that's a completely different animal. This is what the market thinks we're going to do in the next month. The other one is looking at what have we done in the last 100 days to anticipate what we're going to do in the next month. Right? It's two different things. So you can split the mid on those. You can add them together and divide by two, all kinds of different ways that you can get your model for the day. And then there's the idea of, well, do we have a market maker move today? Because we would add any market maker move to an expected move model to increase the distance for today. Those are intraday calculations, right? Based on what could the market do today. The number goes up if you have a market maker move. You add that to the equation, which is why in the morning briefings, I have that one chart, the ADR chart, that has, if there's a market maker move, it'll show up as a label up there. But it has our daily one standard deviation, our daily expected move, and then our ADR all on that same screen. So we can see, what we're working with. And most of the time, we are doing what we're supposed to do, right? We don't exceed it most of the time. And when we do, it's so obvious that we're going to exceed it that everybody knows, right? It's like really big news, and we get these big breakout bars, and it just runs nonstop to the moon. It's not much of a surprise, right? We're running like crazy in one direction, we're going to break it. But they are really proud of their expected move. I don't know if they had to like go to college to figure out the math, but man, they're just really excited about it. And I'm happy for them. I mean, expected move's a good model. We're, we're getting really close to that R3 line that I talked about today in the morning briefing. We have already hit 63.92 cog line, and we're just getting a little bit closer. When it comes to swing trading, um, I found it really hard to trust expected move in swings, but it does help if you can bring in an additional indicator. I really I've grown more comfortable as a swing trader with expected move when you bring in something like ADR, um, ATR, or some kind of volatility tool, because then it helps you better understand the likelihood of price breaking the lines. So I'm going to put the cone back on here, and we're going to go back to some equity. You know what, let's use an ETF like XLF, because we're through like half the banks at least, maybe more. So we'll put this on, and we'll add the expirations. No, there's not a lot of indicators on Thinkorswim that will anticipate the next turning point. There's drawings that you can do that would identify the next potential higher high or higher low. And I would trust those drawings because that's what I use. But there's not really a lot of indicators that'll do it. It's not to say that there is none at all. I'm sure somebody's come up with one, but would I use it? No, I would trust what I drew by hand way more than any indicator that said the next potential higher high is, whatever level. So if you're swing trading, for an example, and I'm looking at, XLF, say you're a premium trader, you want to sell premium. These are your plus and minus levels for like iron condors and, out of the money credit spreads, that sort of stuff. But if if you just have this by itself, how do you know that you're safe, putting a spread there or building an iron condor on that? And you already have the expirations, right? It's your monthly expiries. So what I like to do is add in something like a volatility tool, and there's like DMI, DMI plus, ADR, all of those, ADM. See, let's do it right this way. DRI. Oh, ADX. That's the one I was looking for. ADX. And what ADX focuses on is how much momentum is there. It's not bearish or bullish in the indicator. It's only, do we have momentum or do we not have momentum? So when it's really low, say below 20, you don't have momentum. And if it's above, for an example, 20, then you do. And you'd have to look at price to see, well, if is that, bullish momentum because it's going up, or is it bearish momentum because it's going down? And if it's under I'm going to continue to use 20, but 20 is not a magic number. If it's under 20, is it under 20 but rising towards it, or is it under 20 and falling away from it? Because obviously, if it's falling lower, momentum is decreasing. And if it's rising higher, then momentum is increasing. So you can use that to try to define what I want to put a credit spread on, for an example, to a market using these levels, or am I worried that those levels are going to be breached? If I had a really high ADR, I would not want to put, iron condor on or an out of the money credit spread using those levels, because I'd be worried that high ADR is telling me this thing's got the legs to really continue in its momentum and run me the hell over. So, you get more information, you make a more informed decision about should I put those levels on. The thing is, I don't trade this way. I outgrew it because I would rather put my credit spreads on a lot closer to the money. Even with that iron condor, I'd rather leg into that iron one spread at a time and again put them on at the money. So I don't use this anymore. But that's one way that I did use expected move as a swing trader, where I grew into trusting the framework by just adding more information like volatility. You don't need the ADX, by the way. You could just, turn on the implied volatility indicator and use that instead. We can see that the ADX was low, volatility is low. Now the ADX is starting to climb, and implied vol is still low, and that's because at the end of the day, the ADX, it is showing momentum, but it is a volatility indicator as well. That's why I said you could replace it with volatility. So it has a low volatility. It has increasing momentum. You would be taking a bit of risk to put on a trade that says, I bet you don't go anywhere, on a market that says, I'm gaining in momentum and I'm likely going to go somewhere. You know what I mean? Like those two pieces of information just kind of disagree with each other. When it comes to the next stopping point for the next higher high or the next higher low, I just trust my 111 and the 1236. So if we was to break this high and begin to form a new higher high, then the next stopping point, which is what I call the OCC, opposite candle color, would be at the 1236. The reversal zone, RZ, is at 111, and the OCC is at the 1236. So we break above 1, and if we're going to fail, we'll do it at 111. If we don't fail, we'll get to the 1236, and then we'll get an opposite candle color or a doji. That is the complete sentence. It's OCC or doji. I just never say the full sentence because you get tired of saying it after a million times. Same thing for a downside. If I was looking for a lower low and we breached that 51.33 to the downside, it would be the 111 and the 1236 down there. That's the OCC right there. 50.87. It's funny, we were watching a video today. Me and my wife were laughing on YouTube. It was worst live streams of trading, right? Like these people were just having meltdowns as they lost a lot of money in their live stream trades. And there was a stock trader who was trying to short shares of stock. It was like a $6 stock, but he was short with size. And I was watching where his stops were, and he was triggering his exits, losing thousands of dollars right on the turning point. Right. So, say we'll just use this chart. Say it's a 5 minute, and he was trading it short, and he would have his stop right at the 1236. So what would happen? Price would break out, trigger his stop, and then it would go down. And of course, he just lost a ton of money right there, and now he's missing his trade. It was a funny video. Funny for us, not funny for them. They were losing, you know, a lot of money. worst possible locations, right, for stops. I don't know, man. I know a number of people that make a living on YouTube, and they gotta pander to the masses, you know? You like that, didn't you? Yeah. I can't do it. You know, it's just like selling indicators. I am not a salesman. You want it? If it's mine to give you, I will give it to you. Hopefully you make some money with it. I'm gonna spend all day trying to convince people to buy something. No. So financials ain't looking that bad. They got back above VWAP around noon, tested it a few times, still off of the highs from where they opened today. So, they're still red from where they closed yesterday, but they're doing all right. Um, Green lines leading to the upside. This is a melt up style pattern. The ticks, yeah. Let's just make this one big. So in the upper right corner here are color coded labels, and you may notice there's four labels but only three lines. I turned off the S&P 500. I know it's blasphemy. The problem is these other three markets have thousands of stocks, right? And the S&P 500 does not. It only has 500. So what I found was when I would turn that line on, it always held back from the others. And it hovered around the zero line like this. It really wasn't giving a lot of useful information, and it had no effect whatsoever on reading crossovers or if we were bullish or bearish today. It just wasn't helpful. And a lot of times it was distracting. So I finally just turned the darn thing off. Now, we didn't know when this indicator was built that the green line would become so important. And if I told you that the green line was the Russell, you would probably wonder, why the hell is it so important? It's the Russell. Like, who cares? It's small caps. We don't know why. I don't know why. But if I'm looking for a bullish day or a bearish day, I watch that green line. It is the most important line on the set. Just forget that it's the Russell. Just pay attention to which line is moving. And I look for crossovers of significance. So if we were pointed in a fork style pattern to the upside and suddenly the green line crosses over, breaks everything, and starts heading south, that would definitely get my attention. And I would be really worried or wondering what's going on and what changed and what I can do about it. If we're bullish on the day, it'll lead, it'll dominate. I want to see a good, clean fork pattern like this for a good bullish day, or point them the other way for a bearish day, spread out really nice with green line on top. And I want them to expand from the zero line as much as possible. I don't want to see them hovering around here all day. That's worthless. Doesn't give me anything of value. And I don't care if the green line is leading when it's doing that. If it's hovering around there, there's nothing to it. Here's a crossover day from Monday, and it's worth studying what those looked like. We had a nice fork pattern, everything was great. Then we topped out in all three, and the green line started dominating, and then it crossed, and then it got tangled. So it lost some of its pizzazz. Then it stayed in the middle on the drop down. It would have been better if it had finished the cross and we had this fork pattern with the green line on the bottom. We didn't, and so Monday's drop wasn't, as spectacular because of that, but whatever. So I've got a whole write up on these, and I took pictures of every one of these descriptions that I'm talking about because I went back and I studied the different days that I wanted to see, right? So for an example, going to the S&P and looking at stock on a 5-minute price chart and saying, I want to find a particular day that looks like whatever, right? Like I want a really bullish day, I want a really bearish day, and I want a really choppy day. So I found one of those kind of days, a day that I want to repeat, that I want to, trade early and often and spot as soon as possible. How to read it, identify it, trade it, all of that stuff. I went back to those kind of days and then I turned on that tool and I matched things on that tool to what I had in price action. Here's a day where we started out bullish, topped out, and then everything went to hell. And at the last moment, they flipped it back around on us. That's not an uncommon day. We've seen that before, and we will see it again. So I took a day like that. I went back to the indicator, applied it below, and studied it to try to find, did I see any signals in that indicator to help me identify that this was going to happen? And you can do that for any indicator, right? RSI, stochastics, MACD, whatever it is that you want to use. Find the day that you want to trade, apply the tool to it, and then study it. Because remember, the days repeat over and over and over again. We have 6 types of days. So you pick the type of day, find as many examples of that type of day as you can, and then study that type of day with whatever tool it is that you want to study. Yep. Yeah, like you know, their levels are not really that different than the levels you would find from other places. And the difference, say, between their levels and what I'd get at others is that other places actually use the real futures data, and they're like, well, ours are good enough. So really, I was just hung up on that point. It's like, don't tell me you got it if you don't have it. But if you choose them over spot gamma, for an example, you're still going to get basically the same levels. And I don't, I think they're cheaper than spot gamma. I don't quote me on that. There was a question in the chat about the 6 types of trading days. I've shared this book before, but I'm going to share it again. It's called Secrets of a Pivot Boss. And what you'll find in that are these 6 days. I'm showing one of them on the screen right now. This is a sideways day. Now, in every one of these, and you really, you need to read the book, but it has the imbalance range on there. So it's not just what did the day look like, like where we started or whatever. It's also what was the initial balance range. So that's a sideways day. That's a trading range day. Range days and sideways days are two completely different kind of days. Those have a wide initial imbalance. You got responsive buying, responsive selling, and then your IB high and low. Then the IB high and low, responsive selling, and then initiative selling. That's your expanded typical day because they have a typical day, a range day, expanded range day, double distribution trend days. You can flip those in either direction, by the way. So I'm going to share the book in the chat again once I dig it up. Um, but it is a book worth reading if you want to dig deeper into these different types of trading days. They are a game changer on the perspective of what are we even expecting to do today, right? Because that's a big part of what I cover in the morning briefing every day is trying to answer that question. What are we supposed to do today? Is today supposed to be a sideways day? Is it supposed to be a range day? You know what I mean? Whether we get it or not is a completely different discussion, but it starts with what are we supposed to do, right? So there's the book, Secrets of a Pivot Boss. Like I always tell people, this is a free PDF, but if you learn something and make money from it, go buy the guy's book, right? Writing a book is not easy. Pay him for his effort. If you read it and you're like, ah, that was trash, it was a waste of my time, then fine, don't worry about buying the book, but try to give it back if you can, right? If you get something of value, you make money off of it, buy his book. It's not like the book's going to break the account, right? It's just giving back to and it's an old book too. It's not, some slick modern new age guru stuff. And I found it really informative and it really changes your point of view about the pivots that I use constantly, yesterday's high, yesterday's low, initial balance, those are a big deal in the things that I do every day. So I just got a lot more from my own pivots that I would normally use because of that. You want to be able to take short term trades to hold overnight in any kind of market. I get that. I think that's fair. It's probably what a lot of people want. The thing is, what I try to implore to people is that not all trading days are the same and not all trading environments are the same. For an example, next week is a really, really big deal, right? Like it's a really big deal next week. And we have to be mindful of that, right? QRA, FOMC, and the big tariff event is all happening next week. And this week, price action is going to do weird, funky things because they're not going to trade it the same as a normal week, knowing that next week is this really big deal, right? So the markets, the charts are going to entice you into a trade that looks so fantastic and that makes you think, we're going to do one thing when in reality we have no idea what the heck we're going to do next week. It it's not a time to get heavy. If you're already heavy, it's a time to dial it back. And if you're shopping around for something new, shop lightly. Not sure if you can catch a picture of it, then that would help. Otherwise, see if it's maybe this one, something that looks like that. There are trade strategies that, especially with options, that you can get in late in the day, like 3:30, 3:35, and it's for tomorrow's expiration. They're not quote 0 days because technically we're starting them today, but they will expire tomorrow. There's mechanical strategies that we do that line up that way, but we still have to be mindful that we don't want to use them every day, right? Like we have strategies that can do it, but you want to pick and choose and say, yeah, technically I can run that strategy, but I don't want to run it today because of whatever, right? Like whatever it is. Yeah, that ain't helping a lot of people. A yellow box and it's man, um I don't know, but if you can catch a picture of it, maybe this, catch a picture of it and I will have this is the one. All right, so this is floor pivots. You're more than welcome to it. The daily ones is the daily floor pivot, and then the big one here is the weekly floor pivot, and that is a pivot channel around it. And if you want to know the funny name of it, it's called CPR. Like you give chest compressions to someone who's CPR. So central pivot range, CPR. If you look on TradingView, that's what it's listed under. If you want my version, I just call it complex daily pivots, and I use it all the time. It's in the chat now. So you can call it the CPR indicator if you want. That's basically what it's doing. The math formula behind that, if you was to Google central pivot ranges, the formula is right on Google. Like it just shows up at the top of the screen. And then all you got to do is run the math. Yesterday's high by yesterday's low divided by the middle times two, blah, blah. I don't remember the formula, right? But it's something like that. And then if you double click on it after you install it, you can choose to hide the SNR lines or not, and then you get your SNR lines, right? I could, but not today, right? Like I have an appointment today at 4:15, so I can't today. We can definitely go into it Friday though. Absolutely. And I've got a book that I think goes really well with this. These are your normal everyday floor pivots, right? And your normal everyday floor pivots have been around for 45, 50 years. So there's a lot of really good material around it. I don't mention that to say like, well, they're really old, they're no good. I mention that like in they've been around forever and everybody studied them. So there's a lot of good stuff behind it. There's really great concepts. I don't use them to trade, but I use them to analyze, which is what I do in the morning briefing when I talk about how we've already got to an R1 and we're thinking about going to an S2 and that kind of talk. It all comes from a book, right? The Floor Traders book. So I just got to find that book and we'll go through it on Friday if that works for you. We'll just add it to the Friday topic list. All right, got it. Well, guys, that pretty much wraps it up. I got somewhere to be, so I can't hang out. I will see you all at the morning briefing.